Did you know that the anticipated Tesla stock split will cause a huge explosion in price? Even with the dip, Tesla stock sits at around $700. To think that this has a high chance of increasing after the split is quite news. Stay tuned and keep watching to find out more about this. Tesla stock is currently sitting at $752.29, which is up by 2.54%. This is still a far cry from investors' and analysts' valuations of the leading electric vehicle maker stocks. The expected increase in price after the split may or may not be on par with the said valuations. Given the current economy and unforeseen global issues, no one can tell for sure. In today's video, you will find out why the Tesla stock split will cause a huge explosion in price. When the 3-for-1 stock split was announced to the public, it broke through various news headlines and the web. In a 14A SEC filing, Tesla clarified its plans for the 2022 annual stockholders meeting, which is set to happen on August 4th. Along with the several agenda items listed in the 14A filing, Tesla described its intentions to split its common stock by a 3-for-1 ratio, which will triple the number of available shares and split the price by 1/3 on the day the stock split takes place. This move does not affect the valuation of the company, but simply increases the number of common shares available of a publicly traded company, while decreasing the price to make shares more affordable for investors. Stock splits don't change the value of a company. For instance, investors in a company with a stock trading at $100 that does a 2-for-1 stock split will simply own 2 stocks worth $50 each, wherein the value of their 2 new shares is the same as their prior single share. Yet companies that engage in stock splits often outperform the market, according to Reuters, citing Bank of America research. That could be due to investors buying shares in a company after a split because of the perception that the stocks are more affordable. Companies whose stocks have risen to high prices, such as hundreds or thousands of dollars a share, often turn to stock splits to make the securities more accessible for individual investors. Tesla said that its board of directors has moved to execute a 3-for-1 split for the company's common stock, which means that if you own 1 Tesla share, you will get 2 more. According to them, this move will make the ownership of Tesla stock more available for both employees and investors alike. We want to make sure all employees, no matter when they join, have access to the same advantages, the filing said. We believe the stock split would help reset the market price of our common stock so that our employees will have more flexibility in managing their equity. Unlike other manufacturers, we offer every employee the option of receiving equity. In the said filing, Tesla stated, "The primary purpose of the authorized share amendment is to facilitate a 3-for-1 stock split of our common stock in the form of a stock dividend, the stock split." They further added to say that, as of June 6, 2022, we have 1,036,390,569 shares of common stock outstanding, and the current number of authorized shares of our common stock is 2 billion, which is insufficient to effectuate the stock split. Our board intends to approve the stock split subject to and contingent upon stockholder approval of the authorized shares amendment. The company wrote of the proposed stock split, "Our success depends on attracting and retaining excellent talent, and that highly competitive compensation packages offering every employee an option to receive equity helped Tesla to do that. We believe the stock split would help reset the market price of our common stock so that our employees will have more flexibility in managing their equity." The EV company wrote, "As retail investors have expressed a high level of interest in investing in our stock, we believe the stock split will also make our common stock more accessible to our retail shareholders. If this year's stock split pushes through, this marks the company's second stock split in less than 2 years. It can be remembered that on August 11, 2020, Tesla declared a 5-for-1 stock split, which took effect on August 31st of the same year. The price per share before the split was $2,213.40 per share, whereas shares traded at $442.68 afterward. During this time, Tesla stock was trading at around $1,300 a share, but the stock split announcement sent its stock price surging to a record high of $2,000 a share, wherein the split resulted in the price per share being reset at around $460 and a valuation of about $430 billion. What are your thoughts on the anticipated Tesla stock split? Share your thoughts in the comment section below. Barclays, a British multinational universal bank that operates as two divisions, Barclays UK and Barclays International, is raising its price target on Tesla amidst numerous issues that affected Tesla's production. Barclays is famous for being a major global financial services provider engaged in retail banking, credit cards, corporate and investment banking, and wealth management, and it is raising its price target on the leading EV company by 14%. This suggests that Q2 production is likely to come at about 256,000. Like Barclays, UBS also raised its price target, setting a massive order backlog and a substantial margin momentum. UBS Group AG is a multinational investment banking and financial services company providing financial services in over 50 countries. They are still expecting a 50% growth for the year. They are more inclined to take a year look instead of a quarter-to-quarter look with a $1,100 price target. They also expect that Tesla's vertical integration and semiconductor software and battery will result in superior growth and profitability. And since batteries are the biggest bottleneck for the EV industry, they believe that because Tesla has its battery construction and factories and manufacturing, the company is uniquely advantaged or uniquely positioned to drive higher margins with its batteries and actually deliver. UBS is so bullish in their bull case scenario that they think Tesla can have gross margins that could rise from 30%, where they are currently sitting without tax credits, up to 34.7%, which is quite bullish. UBS has upgraded Tesla to a buy position, saying it now sees more than a 50% upside for the electric vehicle stock. A lot of investors and analysts alike are always on the lookout for well-performing stocks, and Tesla, despite its current performance in the stock market, is still considered a good investment by most. The stock market is pretty much unpredictable, Tesla included, so investors usually observe the movements of the stock before buying in. Robert Johnson, a professor of finance at the Hyder College of Business at Creighton University, said, "Investors tend to like splits because it signals that they are invested in a thriving company. Although it might be tempting to want to buy into a pricey stock when it becomes much cheaper to do so, eager investors should make sure that the stock aligns with their overall investing goals, however. One shouldn't jump all in just to own Tesla stock, for example, unless it's something that has long been a part of your portfolio objectives. If the average investor was attracted to Amazon before the split, then it is probably a good time to invest after the split as it is more obtainable," Stivers said. However, you should only do so if it is part of a well-diversified portfolio. Becoming a stock market millionaire is not easy, but it is possible. Being wealthy is not a requirement to make a lot of money by investing, but you do need the right strategy. Strategy is key to building wealth in the stock market. People in the financial sector know that stocks go up and down, like really up and down. The stock market is just the collective value of all the stocks investors own, so it goes up and down too. The market's biggest one-year gain since 1928 was 52.6%, and its biggest one-year loss was 43.8%. However, the market has on average returned 10%. 10-year government bonds have returned an average of 4.8%. In comparison, the average savings account currently pays 0.09% per year. This is why investing can help investors get to their goals faster than saving alone. Despite numerous issues and roadblocks that plague Tesla, it is undeniable that Tesla is still at the top of the EV market. A lot of investors, even those with years of experience in the financial industry, are convinced that the EV company has a lot of potential and it is more than capable of succeeding in the future, in a way more than people expected. Of course, there is no absolute guarantee with anything to do with the stock market. Still, the possibilities are endless. For more Tesla stock content, visit our channel and watch our other videos.